Okay.
And speaking of crypto, I
Yeah.
think like we can end with this, right?
Yeah, the Stoner Cats did end up getting sued by the SEC. So we actually brought this up. Oh, it was maybe a month or two ago now, when the first.
Or I think lesser. I think it was a couple of weeks ago. If you look back at our YouTube videos, you can check out.
Okay, yeah, I do.
Yeah.
I forget exactly when we talked about this, but it was around the time that the Treasury was releasing its recommendations on how to monitor and how to like legislate the crypto markets. They basically were saying things, or the language of that was very heavily like, okay, a lot of these things are operating in a way that would categorize them as brokers or that would categorize them as security vendors. And so we actually brought up StonerCats as the example, is like, is StonerCats then selling unregistered securities? And the answer is yes. The answer is yes. Clearly, they've been
We had
sued.
absolutely called this. We had talked about this. We said they might be in trouble,
Yeah, I think
and
we tagged
literally,
them in the video, so maybe
yeah.
they maybe they got a little heads
Well,
up.
hopefully they like took notice, and
Yeah,
and we were right. This is exactly what happened.
yeah.
The
And
SEC went after them.
so I was reading into like the exact lawsuit here from the SEC to try to understand what it is that categorizes them as a security. And the big smoking gun in that case is more or less the fact that the Stoner Cats project has a secondary market revenue like royalty, and the amount of money from that royalty was used to buy back, or to distribute rather, to holders of the NFTs. And this buyback and distribution was advertised on the front end. So that when you advertise that kind of a buyback program, or this type of a distribution of project revenue, that is without a doubt a security. And that is where they got in trouble here. There is a lot of cryptocurrency projects, or specifically NFT projects out there, that do this type of practice where they share parts of their secondary market with their NFT holders. And that is very dangerous, especially in this precedent here being set that, that very much makes your project a security. And it's kind of scary to think, because that is very much also the meta of NFT projects. A lot of NFT projects pitch a portion of the value proposition as owning a cut of the entire market of their project.